Hey everyone, welcome back to Pulsecast USA, where we break down the biggest stories in politics, money, and power in a way that actually makes sense. I'm your host, Alina. Today, we're diving into the most powerful financial institution in the world. Not the White House, not Wall Street, not Silicon Valley. No, I'm talking about the Federal Reserve, the mysterious organization that quietly controls interest rates, inflation, recession risks, and even your job security. Whether you realize it or not, the Fed affects your daily life more than almost any other institution in America. So buckle up, because by the end of this episode, you'll understand something that 90% of Americans don't: how the Federal Reserve actually works and why it holds so much power. Let's get started. Whenever people hear the words Federal Reserve, they imagine a giant government bank where employees are printing money in the basement and the president calls every morning to give orders. That picture is completely wrong. The truth is much stranger and much more interesting. The Federal Reserve, or the Fed, is actually a hybrid system: part public, part private, part independent, and completely powerful. It is not fully controlled by Congress. It is not controlled by the president, and it is not owned by Wall Street, even though Wall Street reacts to every decision the Fed makes. And here's the wild part: most government agencies need approval, oversight, or funding from Congress. But the Fed? It can fund itself. It can make its own decisions. It doesn't need permission. That's where the mystery begins. Let's take a quick trip back in time to the early 1900s. America had a problem. Every few years, the banking system would collapse. Not a small dip, full panic. Banks failed. People lost their savings. The stock market crashed. Businesses went bankrupt overnight. It happened again and again. 1873, 1893, 1907. And after the massive panic of 1907, the government stepped in and said, "Enough. We need stability." So in 1913, Congress created the Federal Reserve System, a network of regional Federal Reserve banks overseen by a central board of governors. The original plan was simple: prevent banking collapses, keep money flowing, maintain stability. But over time, the Fed evolved, and it became the brain of the U.S. financial system. Today, the Fed influences almost every financial decision you make, even if you've never thought about it. Here's what the Fed directly or indirectly controls: interest rates, mortgage costs, borrowing rates for businesses, the strength of the US dollar, inflation, banking stability, employment levels. Think about it: your mortgage, your car loan, your credit card interest, your rent, yes, even your job. All of it is impacted by decisions made inside the Federal Reserve. When the Fed decides something, it doesn't just hit Wall Street, it hits Main Street too. Let's talk about the Fed's most important tool: interest rates. If you only understand one thing from this podcast, let it be this: when the Fed wants the economy to grow, it lowers interest rates. Lower rates mean borrowing becomes cheaper, businesses expand, home buyers rush in, consumers spend more, stock market rises. It's like putting your foot on the gas pedal. But when the economy is overheating, the Fed raises rates. That's the brake. Suddenly, mortgages get expensive, car loans skyrocket, credit card debt becomes heavy, people spend less, businesses stop hiring. It slows everything down. This is why you see headlines like, "The Fed raises rates," "The Fed signals cuts," because a single interest rate decision can shake the entire global economy. Most people only hear about interest rates, but that's just one piece. The Fed has a whole arsenal of tools: quantitative easing, QE, quantitative tightening, QT, open market operations, reserve requirements, liquidity windows. Sounds complicated, right? Let's simplify. Quantitative easing, QE. Basically, the Fed creates money digitally and buys assets, usually government bonds. This pumps money into the system. QE lowers interest rates, boosts markets, and encourages spending. Quantitative tightening, the opposite of QE. Think of it as money being pulled out of the system. Open market operations, buying and selling government securities to adjust money supply. Reserve requirements, how much cash banks are required to keep available. Liquidity windows, emergency lending to banks. During crises, the Fed becomes incredibly powerful. Let's talk about 2020, the COVID crisis. The US economy was about to collapse. Businesses closed, markets crashed, unemployment surged. The Fed stepped in and did something unbelievable. It created over $4 trillion in new money, digitally, instantly, and poured it into financial markets, banks, corporations, government bonds. Some economists say the Fed saved America from a depression. Others say the Fed created the inflation crisis we're paying for now. Both might be true. This is the part most people get wrong. The Federal Reserve is not controlled by the president. It's not controlled by Congress. It's not controlled by Wall Street. It is independent. The president appoints the Fed chair, but once appointed, the president cannot tell the Fed chair what to do. That's intentional. It keeps political pressure out of monetary policy. Today, the Fed chair has more influence over the economy than almost any single person in America. A single sentence, a single hint, a single word can shake Wall Street, global currencies, international markets. That is the level of power we're talking about. The Federal Reserve is controversial. Critics say the Fed manipulates markets, it creates bubbles, it prints too much money, it causes recessions, and it has too much unchecked power, and it's run by unelected officials. Some even want to abolish the Fed. Supporters say without the Fed, recessions would be worse, banks would fail more often, inflation would be wild, the dollar would be unstable, and the economy would be chaos. So who's right? Honestly, both sides have points. The Fed is a stabilizer, but it's also a risk. It's powerful and misunderstood. So the next time you hear about interest rate hikes, inflation reports, market crashes, or bank failures, remember, there's almost always a Federal Reserve decision behind it. The Fed shapes your financial life, quietly, constantly, and often without you noticing. Whether you're buying a home, starting a business, applying for a credit card, looking for a job, or saving for retirement, the Federal Reserve is always in the background, pulling levers. And that's a wrap on today's deep dive. If this helped you understand the Federal Reserve better, even a little bit, make sure to like, subscribe, and hit the bell so you never miss an episode. This is Alina, and you've been listening to Pulsecast USA. See you in the next episode.